The global wealth and asset management market is a $110 trillion market. So 1% of that coming into Bitcoin is $1 trillion of inflows. We've been very excited with these Bitcoin ETFs because they've gathered $10 billion in assets. But, that's sort of 1% down, 99% to go. So there is a lot of room in this space.
Hey guys, welcome back to the show. Today we have an amazing guest, one of my favorite, Matthew, CIO from Bitwise. How are you doing today?
Oh, thanks so much. I'm doing great. Thanks for having me on. How are you?
Super excited about this conversation. I've been waiting. I've been preparing for having you on the show. It's super, super good. Again, thank you so much for finding time for us. Really appreciate it. The SEC took a long time to approve the first spot Bitcoin ETF. The brothers Winklevoss applied in 2013, I think it was. Why do you think it took so long for the SEC to say yes, finally, to this?
Oh man, it almost killed me. It took so long. Brutal. Look, if we go back to 2013, I think it's fair to say that the market actually wasn't ready for a spot Bitcoin ETF. There were no institutional custodians. Trading was relatively limited. The infrastructure was relatively weak. Even if I were a regulator in 2013, I'm not sure I would have said yes, right? Because you want that robust institutional architecture. By the time we got to 2018 or 2019, I think the market was ready. I think an ETF would have worked. It would have worked perfectly. It would have helped investors. It would have protected them from going to offshore exchanges, which failed. And I think it's unfortunate that the SEC didn't move forward. They say about the US that it always does the right thing after exhausting every other possibility. And I think this is a good example of that. We have to give them some credit, though. They were initially encountered Bitcoin in its early ages when there were real issues, criminal use, lack of custody. And I just think it took a long time to get past that anchor and reflect on what it is today, which is an institutional caliber asset that is changing the face of finance and that fits alongside stocks, bonds, et cetera. So they made it eventually. It's unfortunate it took so long. And I'm glad we're in the ETF era now.
Yeah, I agree. It's better late than never, right? So overall, happy days. There's Bill Gates, you have Jamie Dimon, JP Morgan. Why do you think they don't get Bitcoin?
I think it's true with every disruptive technology. If we go back to the early days of the internet, there were plenty of people who didn't get the internet. When the iPhone launched, Steve Ballmer of Microsoft said he'd expect there to be, 5 sales. When the personal computer launched, the CEO of IBM thought that there was no market for personal computers. Every time we get a new disruptive technology, the entrenched incumbents have a hard time wrapping their hands around it. Now, we have seen some progress. If you look at Larry Fink at BlackRock, largest asset manager in the world, in 2017, he called Bitcoin an index of money laundering. And today he runs the largest Bitcoin ETF in the world and owns 0.1% of all the Bitcoin that ever existed. So we are seeing some progress, but I think it's just part and parcel of any disruptive technology. The flip side of that, of course, is that the failure of institutions to recognize what this is and how important it is and that it's not going away has opened up the door for investors to get ahead of those institutions, which they've been doing for the past 15 years. So I think it's a classic tale, a tale as old as time. We're always skeptical of the new thing, and I think eventually they will get there.
Even electricity, right, was not well welcomed. I remember the Netscape days back in the days when internet wasn't even internet, and I was trying to explain to my friends what in the hell I was doing as a job, building web pages in HTML, and they're like, this is not going to work. You have to connect into it. It's super expensive. You can't use the phone. And I was like, yeah, but this is the beginning. They're going to build infrastructure. We'll have things, companies, startups. But like you said, there is always resistance.
The internet is a great example because it was rough in the early days. It was hard to access. It was imperfect. It was, a confusing space. But if you understood at the core what the technology could do, it was magic. It could connect the world. It could move information at the speed of light. The same thing is true of Bitcoin. If we go back a few years ago, the space was challenging. The UX wasn't very good. The protections weren't very good. But if you understood the core technology, the ability to self-sovereignly hold wealth, the ability to move money and property at the speed of light, you saw that it's inevitable that it's going to grow. So I think it's a great analogy, and it's playing out exactly the same as it did in the past.
I agree. I don't know if you remember in 2007 when Apple launched the iPhone, the number one app in their Apple store was the beer glass. Was basically an app that was simulating a beer. And I remember just downloading it and showing to all my friends. Amazing, they are changing everything. I was like, yeah, but it doesn't do anything. I was like, yeah, but you don't see this. You don't see where they are going with this. If you use your imagination, there's going to be people building on protocols like you pointed out super well, HTTP, IRC. Those are protocols that company have built on for years and years, and now we have services like Wi-Fi, and we jump into things, we chat over WhatsApp because of these kind of technologies. So I agree 100%. I think if you've gone through the internet moment, you have to get Bitcoin, right? Because we are digital every single day, over and over. So it becomes maybe easier for someone who has gone through certain technologies before than others. I completely agree 100%.
Yeah.
When it comes to like the broader population, I think we are around 2 or 3%. How long do you think it's going to take for the average Joe to basically not just be aware of Bitcoin, but also start maybe saving into it or using it?
Yeah, I think it's going to happen faster than people think. The thing about exponential growth is in the early stages of exponential growth, it doesn't look like much, right? 1 to 2, 2 to 4, 4 to 8, 8 to 16. You don't get to mass adoption. It doesn't feel like mass adoption. It just feels very niche. But if we look at what's going on in Bitcoin, it's been growing at an exponential rate for 15 years. User adoption has been increasing cycle over cycle. And I think we're finally reaching sort of that escape velocity point where people will start to see the numbers. I'll also add that sort of the growth we've seen in scaling has unlocked the ability to have these sort of real world use applications. So I think we're pretty close. You can see it with the approval of the ETF, right? How many investors could access crypto before the ETF in the US? Maybe 1 in 5. Post ETF, within a year, it's going to be 5 in 5. And so you're going to see that sort of exponential growth curve. I often get asked, like, when will my father be using decentralized apps or crypto on a day-to-day basis? And, he already has some investments in Bitcoin, but I think it will start to feel mainstream within the next 2 or 3 or 4 years. I do think we're at that sort of turning point.
Even though it feels still prehistoric, like you said super well, a lot has been going on, right? So I'm actually excited to see what will happen in the next 10 years, because like you said so well, it's exponential. So what's going to happen in the next 3 years is gonna go so much faster than what happened in the past 10 or 12. So super exciting days. And you guys have probably my absolute favorite product in the market, because you actually have a Bitcoin address where you can say, look, don't trust, verify. I mean, this is incredible. So my hat's off to you guys for showing how it's done.
Well, thank you. Yeah, appreciate that. I think, there's some lessons that crypto can learn from the traditional finance community of things that they've done well in the past, but there's a lot that traditional finance can learn from crypto. And this is a great example. Traditional finance relies on auditors who are expensive people who wear suits, and you hire them and they review their books and they say, I vouch for this as being true, and we're supposed to trust them. And it's complex and expensive and requires trust. Whereas we can just publish our Bitcoin address and you can look at it instantaneously and see exactly how many Bitcoin we have. It costs us nothing. It costs you nothing. And the level of trust is so much bigger. I think it's a great example of how crypto can improve the traditional financial ecosystem and how there's going to be a merging of those two that will make things better and better. So I appreciate you calling that out. We're super pleased to do that. We're super pleased to donate, 10% of our gross profits to Bitcoin core developers. We try to be an asset manager that deeply cares about Bitcoin, right? Deeply cares about its future and where it's going. It's all that we do is crypto. And we try to express that in how we're designing the product.
That says a lot about you as a business, because there is a difference in between, and I'm not judging here. All I'm saying is there are different companies doing different things, selling the same probably product, but it's not actually the same, because if you look into the reasons why people are doing certain things, you can actually see the fundamental core beliefs, which is fantastic. Like when I've seen you guys Twitter it, I was like, this is amazing. This show that they actually are understanding what Bitcoin is about, right? Because of course, you can skin a cat. Why people say skin a cat anyway, but you can flip the story in so many different ways. But when you show that you are truly understanding what this is going to be about, I think it's magic. So thank you for doing that.
Well, thank you. We all exist, and these businesses we're building exist based on the community that supports Bitcoin, including those core developers who, those are sort of the shoulders that we're all sitting on top of. And, it is important to us that we pay back and hopefully create a funding mechanism that can support and help support that incredible ecosystem. So we were really pleased to do that, and it's been wonderful to see the reception from the community. We're trying to, we think the world would be better if there's a crypto asset manager that really cares about crypto, and we're trying to be that, and we do.
Yeah, successfully, I would say. So super well done.
Thank you.
And when it comes to the fund itself, like, is it retail, is it institutions, is it a bit of both? Who's contributing in the fund itself?
Yeah, it's a bit of both. The thing about an ETF, the beautiful thing about an ETF is you can think of it as a way that every investor can access the market in the way that the largest institutions in the world can. So my father can buy the same ETF that the Harvard endowment would buy at the same price. That's the beautiful democratizing thing about the ETF. What we've seen in BITB, we've definitely seen retail investors accessing it. We've definitely seen wealth managers, financial advisors accessing it. We've seen hedge funds and venture capital funds accessing it. And we've seen, we had our first corporate client come in and put Bitcoin on the balance sheet via our ETF over the last few weeks and is building a very substantial market. Not yet accessing it, but investigating it are big wirehouse platforms like Morgan Stanley, pensions, endowments, and traditional institutions. But I would say that this wealth market is bigger than people think. Maybe most people don't know this. The US sort of wealth management market has three buckets. It has retail investors, it has wealth managers, and it has institutions like endowments. And everyone talks about institutions because it's very sexy, right? They're the most serious investors in the world, pension plans, et cetera. But actually, the wealth market is just as big. The retail market's about 20%, wealth market's about 40%, institutional is 40%. So I would say that 60% of the market is accessing it today, and the remaining 40% is coming online. But if you play this out in 2 years, every investor will have the ability to easily access Bitcoin. And that's going to be good for the space. And the last thing I would say, there's, of course, an irony in having an ETF for Bitcoin, right? Bitcoin is about the ability to self-sovereign wealth and hold it directly. And an ETF wraps that in a financial product, and we recognize that. But the movement of these institutions into the ETF is supportive of the core mission of Bitcoin as well. It makes it a bigger ecosystem, a broader ecosystem, and it doesn't take away from the people who want to do it the original way and hold it themselves. It's sort of a rising tide that lifts all boats.
Yeah, I agree. I had Peter Schiff debating on my channel with Da Vinci, which is an OG Bitcoiner, and this came up, right, saying, well, the ETF. I disagree with, of course, Peter Schiff agreeing with you. I don't think it's a problem. I think it's another way for people to get custody. Like, there's a lot of responsibility when you become your custodian, and some people don't want that. So that's okay. That's a choice. As long as people can choose, nothing is wrong with it. As much as everything else, there is so many services I use and I don't want certain things, and I'm happy to pay a commission to someone to do whatever they have to do. I mean, gold itself, when you buy gold, you don't want to store it. You pay someone who's going to store it. So isn't that the same thing? Right. So down to an extent, I think what you guys are doing is actually quite remarkable, because you are broadening, right, to everyone the option to hold Bitcoin without the responsibility that comes with. And then if you want to go in and hold it directly, you can. And maybe some people will go through an ETF first and then just like warm up, take a bath, and maybe then later on become custodians. Or other people maybe will never do it. But I think it's great that you guys are helping adoption, that's for sure. And what do you see in the next few years coming in? So you mentioned an exponential curve of adoptions. Do you see like institutions starting to say, hey, maybe 1%, 2% is conservative? What do you see in the next few years coming in?
Yeah, I absolutely see that. So within the wealth space, we're seeing people talk about 3 and 5% allocations. I think in the institutional space, you'll be talking about 1 or 2% allocations. But just to put the scale of that, globally, the global wealth and asset management market is a $110 trillion market. So 1% of that coming into Bitcoin is $1 trillion of inflows. We've been very excited with these Bitcoin ETFs because they've gathered $10 billion in assets. But that's sort of 1% down, 99% to go. So there is a lot of room in this space. One thing that I should say, if you think about the base case for how an institution invests, they actually just want to own all the assets in the world. right? They want to own all the stocks. They want to own all the bonds. That's why you hear so much about index investing and say owning the S&P 500. They don't want to pick one company. They want to own the global market. If that's your perspective, Bitcoin is now part of the global market, right? It's $1.5 trillion. In my view, it's going to many trillions of dollars. If you don't have a small allocation to Bitcoin, you're actually missing out. You're actually short. The neutral position is going to be a 1% allocation. And then there'll be some people who are 2 or 3 or 4 or 5, and other people who are 0. That's fine. But I think the base case, 5 years, 10 years from now, is that Bitcoin will be in most portfolios alongside stocks and bonds and real estate and venture capital and these other assets. And that's going to be, really significant. And I will say that will lift up Bitcoin, make it more robust, and actually enable future use cases of Bitcoin, like being a true settlement rail for international commerce that's apolitical, being a true, means of payment in other spaces. The beautiful thing about this movement of wealth into the space is it will help Bitcoin achieve those goals by making it bigger, less volatile, more broadly accepted, et cetera. It's sort of a stepping stone to where I think Bitcoin is going.
Super well said. I think if you look into the market cap of gold, which is what, 14 trillion more or less, I mean, it's a no-brainer. We're going to get there, maybe not tomorrow, but it's inevitable, right? And, seeing all these ETFs, I mean, if you look back into what happened to the gold ETF, which one was launched years ago, and you look what happened in the past, not even 3 months. I mean, it was January 11 when it was launched. It's like the end of March now. I mean, we've seen a significant difference in adoption. So like you said, it's going to probably spread because the more people are going to purchase it, the more people are going to talk about it, and the more people are going to get to know the asset itself. I believe if you are actually bullish in digital, if you believe what we are going forward as a civilization, you have to at least look into it. I mean, you don't have to per se buy some, even though that no financial advice, but that's what I'm doing for the past 11 years. But I think it will be interesting to at least look into it. And then I like to say that if you do look into it for real, though, if you put some time and read the 9-page that the white paper is built of, which is very simple, it's going to become super hard not to invest into the asset itself.
I think that's right. I think the people who engage with Bitcoin, the vast majority of them end up investing because it's such a compelling narrative and such a compelling speech. I do think the ETF helps move that forward. You mentioned gold. People don't remember this, but before the gold ETF, gold wasn't really an institutional asset. You didn't have pension funds buying it. You didn't have wealth managers buying it. It was sort of this obscure asset class that you bought via coins from, little shops in Times Square. It wasn't an institutional asset. The ETF helped that. I think that's going to happen with Bitcoin. But I love that you brought up that we're in this digital world. I think that's a good way of framing it and maybe helps break down some of the skepticism that people raise against Bitcoin. But look, everyone's going to get there. We've been moving in one direction for 15 years. I think the next 15 years is going to be exciting, and it's going to be fun to watch.
Yeah, I think to quote Michael Saylor, everyone buys Bitcoin at the price it deserves, right? So some people discover it earlier than others, but I think it makes sense. And by the way, I am basically a Bitcoin maxi. I mean, I do like to speculate in the cryptocurrency casino every now and then, but majority of my portfolio is basically not even fiat. It's actually Bitcoin. It's been a while. It's been a bit since it's like this. But sometimes when I talk to other people, they're maybe more into crypto. I don't think Bitcoin is crypto, but that's my own view of describing it. Mm-hmm. When we discuss one another, I say, hey, meme coins are great because they're going to allow people to make some gains or lose some gains, get attention. And if they get into a couple of cycles, they're going to come out maxis because it's next to impossible not to be. That's my opinion. If you do understand the whole ecosystem, if you invest money and time and study those things, you will get there automatically by investing into, it could be Pepe, it could be Dogecoin, whatever meme it might be. If you do a cycle or two, then you come up with a hat with Satoshi on it. It's inevitable.
Yes, I think, look, Bitcoin is at the center of this ecosystem. It has the most compelling use case. It's addressing the largest market. I think there are various other interesting things you can do with public blockchains outside of monetary uses. And it's interesting to see those evolve and develop. And, I love watching that. I do think it brings people into the ecosystem. But if you ignore Bitcoin, you're ignoring by far and away the largest addressable market that public blockchains are going after. And Bitcoin has an unassailable lead and the perfect design to address that market. So, I know maxis love you only to love Bitcoin. I find the experiments in other sort of blockchain-based applications interesting, but I think they're wholly separate from what Bitcoin is going after, which is this new monetary asset. And it has, as I mentioned, an unassailable lead, and that's the largest market that crypto is going after. So it's very exciting, and it should be part of any crypto investor's portfolio.
I agree. I usually say I like to go to the casino, maybe smoke a cigar and play the roulette. That's what I do with the crypto in general. But, I don't go with all my belongings and gamble on it. I just take a small percentage while having fun. And if it goes to nothing, well, we're having fun. Who cares? And also, what is super exciting about this is January 11 was when the ETF were approved, and now we are almost like a month away from the halving. I mean, it's a moving target, but more or less it's 25 days, which is super exciting because the supply is going to be chopped in half. From 100 Bitcoin a day is going to be 450, which means all those institutions that you guys are advertising to so well, they're going to be interested, and there's going to be less supply in the market. So perfect timing, I would say.
It's amazing to have these two things line up. The halving will remove $10 billion in new supply from the market every year based on current prices. That's a lot, right? People spend all this time modeling Bitcoin and trying to come up with sophisticated models, but it ultimately comes down to supply and demand. And because we know supply, it ultimately comes down to demand. And right now, there is a massive new net source of demand for Bitcoin. And until that, and it's overwhelming the amount of new supply. And that's why you're seeing prices move up. And if we can clear this sort of all-time high hurdle, I think there's significant room above that before we run into another sort of cliff of sellers. So it's an incredibly attractive setup for Bitcoin. That doesn't mean there are no risks, doesn't mean it won't be volatile. Of course there are risks, of course it's volatile, but at a fundamental level, when you talk about the fundamentals driving this market, they're just extremely attractive. And the fact that we have the ETF approval and the halving lined up so close together, it's wonderful. One more thought that just occurred to me. We started this podcast talking about why it took the SEC so long. I was at a conference with Anthony Scaramucci, and he said that the SEC did a great favor by waiting. Got SBF out of the system. We got Three Arrows Capital out of the system. We cleansed all of that. And now we launched in an institutional moment with the halving just a few months away. It sort of all has aligned perfectly, and it's an incredible setup, I think, for investors.
Yeah, really well said. And also, I like that you said volatility. If you think about your heartbeat, it's not flat, it moves, right? So volatility is signaling life. When something moves, it means it's alive. If it was flat, it would be dead. So I actually embrace volatility.
Yeah, I love that. That's exactly right. Well said.
Thank you so much for being here today. It's been super fun, and it means a lot to me. I appreciate it.
Well, thanks for having me. This has been a lot of fun. Stay interested in Bitcoin. It is the most exciting story in the market right now, and a big deal.
See you guys on the next one. Thank you.